Nothing to talk about. Nothing happening today at all.
No,
I'm kidding, of course. There's more than enough news here to go to keep us busy for a long time, and tons of volatility too. And that was something different, actually. Going into the Fed meeting, a lot of the volatility indicators that you were looking at suggested that there wouldn't be too much volatility coming out of that Fed meeting. And it's been exactly the opposite, whether it's the Fed or trade. What are you seeing now beneath the surface?
Yeah, so in all of the measures that your team has been correctly identifying as a little bit wary positioning, the VIX is really just at 20.5. And so even though it was a pretty big pop from where we saw it midweek and just yesterday even, all else equal, I was expecting it to go potentially into the lower 20s, mid 20s. But I think everybody's waiting for me to get interrupted by the news of the plan that is going to come out of the executive office and see where we go from here.
So what, in terms of, if you are taking a look at the VIX and the SKU index, and then you bring bonds into it, the MOVE index, so many different indications of volatility. A lot of our guests have been saying that there's reason to think that we could have pretty decent volatility right into September, up to October. Then the fourth quarter is going to be great. Are you seeing something similar, and how would you suggest playing what you are seeing?
Yeah, so as we've talked about before, I look at what's the market implying, and then versus what do I think is possible or probable. I would agree with what you just referenced. I think the potential and the probability of a lot of movement is there. There are enough events and catalysts in place. What I understand of being the supply of volatility that's pushing things low from my perspective is a lot of institutions who are selling vol as a replacement for their stock exposure. So it's a big under the surface rotation that's happening. It's over and over again creating opportunities from my perspective and Headwaters' perspective to position long volatility and then benefit from days like today.
That's pretty interesting, the idea of selling vol as stock exposure. It reminds me of a number of years ago when there were a lot of folks that were buying high yield bonds for stock exposure. So in terms of specific plays for our viewers, what do you suggest at this point for a long portfolio?
Yeah, so for a long portfolio, I continue to think that buying calls delta neutral, which means buying a call and then hedging it with the underlying stock, creates cheap volatility exposure, and you also get exposure to upside drift if the tide is not interrupted. So I still think the tide is higher because of accommodative policy, and I think you can have both.